Alright, I'm just waiting to see how this candle closes. 8 seconds left on this 3-minute candle. Looking to see it close green. 1, 0. Next candle. Buy.
Order filled.
Alright, we're going to put our stop right here. Stop. And let me measure this out. We want it to be at 42.50, and it's a little bit below that, so let's go 42 even. Let's correct that, let's correct that. 42, that is the stop. Removing the old stop. Okay, and now we're going to set this up. We'll have 2 take profits for this trade. And the first one is going to be $18,346 even. How is that? Okay, I'm not seeing correctly. Alright, 18,346 even. That is limit order number 1. That's the first take profit. And I'm going to pull the fib extension here. And let's pull it from, let's go here. And that is about where the first TP lines up anyway. Okay, so if that's the case, let's look for the second TP based on the fib extension, and it's just a little bit beyond that swing high, so I think we'll aim for right here being our second limit order. Okay, so we have our limits placed, we have our stop placed. I'm going to go back to the full amount of volume, and we're going to wait for 2 candles that close above my entry point that are no longer touching my entry point. Trading order block theory here, and using an indicator-based strategy to establish what I like to call a sniper entry. And so now we just give it time and we just wait and we see how it plays out. And as soon as I can, I'll be looking to add a break-even stop loss to the trade if this does continue to move in my favor. So we're not going to add it yet, just give it time, we're not there yet. It is Monday, and based on my own trading statistics that I keep on my trading, I like to lower my risk on Mondays, and I like to trade very cautiously on Mondays, and this will be my last trade of the day, irregardless of how it goes. I took one trade earlier, and it was this move down, but because I felt like the setup just looked a little bit sloppy, I jumped out of the trade when it was about break even, because it just didn't feel like the best setup that I could have taken. So I just chose to bail on that trade. And it did move, obviously, as you can see, it went just fine, and it hit what would have been my only take profit that I would have set in the trade, but I just didn't like the way that it looked, so I did bail on that trade. So this is my second entry of the day, and yeah, so we'll see what happens here. I'm trying to decide if I want to set an early stop. It's Monday. I'm going to set an early stop. I'm going to remove the original stop loss. Now we have a break-even stop loss. I'm adding it prematurely because I do not trust Mondays, plain and simple. And on top of that, I'm trading I'm like smack in the middle of a lunch hour. And also, as you can see, in the short term, you could basically call this, in the short term, a downtrend. Not higher time frame, but the short term, I could very easily look at this as such, and we did just smack the 20 moving average, so I don't really think it's the worst thing that I could do. And if I get knocked out of the trade, I would be done trading for the day, like I said. So that's where it's at. I think I am going to get stopped out of this. Is that a fair value gap or no? A slither of one? Is that what that is? I don't know. Alright, 45 seconds left on this 3-minute candle. Seconds. Five seconds left on that candle. Perfect. All right, so based on the rules, that's where I would have been applying that break-even stop anyway. Glad to see that we made it this far. Let's see if we push up or if we come smashing into my stop loss. So now I think I'm going to just take my hand off the trigger and just relax now and just let it play out however it's going to play out. a very tight stop, so there's a good chance it'll get hit. I'm just not willing to take any more risk than what I'm taking. I think this is fine. If you're having trouble holding your trades, meaning you're just getting scared every time you're in a trade and you jump out super fast, you don't let it run, like if you have a certain premise about where you believe the market is going, or however whatever your strategy, however you set up, like where you take your profits at, if you're not able to if you're having trouble sitting in trades and just letting them play out, one thing that I would recommend that helped me, I'd say tremendously, was just reducing the volume that you're trading with. So an easy example is, I think in futures, so many people think that they have to, or they're so excited to trade with E-mini contracts, and you don't have to trade with E-mini contracts. You can trade with micros. It's a lot safer. For example, if you were able, for me, if I was able to take a trade based on my risk management with one Nasdaq E-mini contract, I would far rather, as opposed to trade with just one contract, I'd rather drop down to the micros and trade with 10 contracts in the micros than trade with an E-mini. Why? Well, number one, probably the biggest reason, is I'm able to scale out of that position slowly rather than hold one take profit that I gotta hold the entirety of a trade, right? So for example, let's say if I wanted to take this trade with one NQ contract, based on my risk parameters, I would basically be risking a max of $750 as a loss in that trade, but I can dramatically reduce it, or I can trade with, generally the same amount of risk, but give myself the ability to maybe take profit here, take profit here, right? So instead of being scared out of my mind of holding that one E-mini for the entirety of that trade, I can drop my risk as the trade moves in my favor, right? So I don't have to be so scared about if it pulls back on me, or if it pulls back entirely and it's gonna hit my stop that maybe is still down here, because most people don't move their stop to a break-even stop this early. So but also just mentally, when you don't go full, when you don't max out on how much risk you can take, it just makes you trade with a calmer frame of mind. And that's very valuable in trading, because I don't know, for me, it helped me to reducing and going back down to micros as opposed to trading with E-mini. I'm so much more relaxed in trades. Now it's when I'm in a trade, I'm not constantly thinking about, oh my God, what is the potential damage that could happen here? I feel so much safer because my risk overall is smaller, and I know that I'm able to scale out of the position as it moves. And so that's helped me tremendously. I've heard a lot of other people say that that helps them. So if you're trading with like the big boys and you're nervous and you can't hold a position, try going down. Try sizing down. Go back to micros and see how that helps you relax. And the thing that I have told myself is like the only reason you want to take more risk, right, is because you want to make more money. But this is the thing, if you really are, like if you think you're a good trader and you really are the trader that you think that you are, if you size down to micros and it helps you actually hold a trade and build confidence, in the long run, you're going to do better than what you would trading with E-minis and having this massive amount of risk and that fear hanging over your head. You're going to make mistakes. You're going to end up losing more money than you are making money. So in my opinion, drop down to micros. Stop trying to make $1 million every single trade. Learn how to be a patient, consistently disciplined trader that just sticks to your rules and trades within beautiful risk management, beautiful risk parameters. And I think overall you will do a lot better, and you'll scale faster than what I think you would. That's just my opinion. But some of us, we need to learn that the hard way. I learned that the hard way, and it is what it is. But if you're just beating your head against the wall and you're like, oh my God, what can I do? Do that. Stop trying to make $1,000 every single trade. Stop trying to make $5,000 every single trade. Stop trying to make $500 every single trade. Become a patient and consistently disciplined trader, and it'll happen for you. Alright, so we are testing the 50 moving average in both the 3-minute and the 5-minute, so let's see what happens here. We could do a hard smack and push down from here, or we could blow through it. Let's see. So I've got my stop placed, a break-even stop, and so once that happens, then I monitor the trade for reasons why I shouldn't be in the trade anymore. So if I see a reason why I should get out of the trade, and essentially for me that just means if I see my rules met for a reversal, I'll either tighten up on my stop or just get out of the trade entirely. So that's what I'm watching for. But again, keeping in mind, we still have a very tight stop here, so it could still definitely get hit. So we wait and we watch. And, if you do actually have a good strategy and you size down and just let your trades play out, you'll be able to later on have the confidence to hold those trades when your position sizes are a lot bigger, because you've already gained the experience of letting it play out when you weren't afraid of the risk. And again, you'll just do better later on. So in the beginning, just be patient with yourself. The goal is just, you can try to get rich in one trade, but statistically speaking, it's not going to happen. And statistically speaking, even if it did happen, you'd probably lose it just as fast as you made it. Oh, and another thing, stop looking for trading to be massively exciting every day. Sometimes people come to my videos and they're like, oh, she's just staring at the screen and she's not saying anything. I'm not trying to be negative, but as I tell people, I record my trades so that I have them like a trading diary. I can't keep them on my computer because it takes up too much space. So I dump them on YouTube. And the way that I behave while I'm trading, it just has to do with like my mood that day. Sometimes I'm like hyper, like really hyper, like can't sit still, can't shut up, holding literal conversations with Nasdaq. And then, other days I'm not. But, at the end of the day, what I'm paying attention to is my rules, market structure, risk management. And, if you want to trade, like if you want to get to a point where you trade like full time for a living, I'm sorry, but like it's not going to be super exciting every single day. It's just not. So you have to be okay with that. And you also have to be okay with consuming tons and tons of information like education around trading. That's also not exciting. It's like going to school and getting like a real life education and doing something, but like there's no teacher that's going to make you sit down and shut up and like pay attention and absorb the information, write it down, journal, be able to accurately recall. Nobody's gonna like be on your ass. This is all on you. So if you need constant excitement, if you don't have an attention span, this is the wrong game for you. Now, it doesn't mean that you can't modify your expectations or modify the way that you modify your approach to trading, but I do think that that's important to do. When you watch reels and you watch shorts on social media, you're gonna typically be watching the most exciting part of that particular trade. And I know, like for myself, if I turn a trade into a short, it's probably because it happened to be an excitable trade that like I was acting like a fool in. You know what I mean? So don't be confused and think that that's the way that your trading days are supposed to look every single day. People come to my channel and they think it's crazy when I take a break-even trade. When it like I'm like, how long have you been trading, my guy? If you've never taken a break-even trade or had a trade partially push to your take profit and then turn around, like come on, like we gotta have realistic expectations in trading. Every trade's not gonna make $5,000, okay? Relax. And if you're that guy that's pulling off trades that are making like $5,000 every single trade, okay, like show us the way. Show us the way, or shut up and let us just follow our process and figure it out. All right, looking to see a retest on the 5-minute 50 moving average here. It's sitting about right here. So let's see if we can get a retest and a push through the 50 moving average. I don't know where my chapstick always walks off to. It's weird. All right, let's see if we can get a nice push through this 50 moving average. Can we do it? So we're right at it. Let's see what happens. We got a minute and 20 seconds left on this 5-minute candle. Let's see if we close above it or below it. Seconds left on the 5-minute candle. Seven seconds. Sitting above the 50 moving average. Let's see if we hold and close above it. Nice, we gotta close above it. Alright, cool. Let's see if we hold. I like the way my signals look. They look strong. They look very, very bullish at the moment. My first TP is based on two things actually. It's based on where a bearish order block lies, but then it coincides with the Fibonacci retracement level, and it's typically it's the first one that I like to use for TP1, or like if it was a situation where basically I'm holding one contract and I could only choose one take profit, I always go with the 1.618 fib extension level. I can't say that it's hit 100% of the time, like definitely not, because obviously sometimes I'm wrong directionally and time wise, but when I back test, it's like it's the level where you get like a decent movement, but of all the sizable movements, it's like the most consistently hit. And of course that's pretty much like the first level, and the second one after that, it goes to from 1.618 to 2, and then from there we get a 2.272 level. I like that one as well, but I trust the 1.618 in most circumstances before I would jump to the 2.272. So let's see if we're getting a rejection here at the 50 moving average, or if we pop up off of it again. So we have I'm looking for contraindications to stay in this trade. This could definitely be a rejection level, but I'm going to continue to hold it because I don't feel like I'm fully seeing a reason to get out. And the trade it's protected, so worst case scenario, we break even. That's not worst case scenario, but you know what I'm saying. So 3 consecutive red candles, that's a bit significant. So I would definitely like to see this candle close green in the 3-minute time frame. At worst, I'd like to see it close above the 20 moving average. So the bottom of this candle, this active candle right now, is sitting on the 20 moving average for the 3-minute time frame. And we have 35 seconds left on this 3-minute candle, so it's not really looking like it's going to close. We don't know. Let's just wait. Seconds. Interesting. Alright, so candle was taken by the bulls at the last minute. Alright, looking to see how we respond on this retest to the 50 moving average in the 5-minute time frame. Seconds left on the 5-minute candle. So close as a doji, a red doji. This spot is really starting to look like a rejection. At 18,290. Slither of a fair value gap. New York time. I would definitely expect it to start picking up, but I'm like, if I was just looking at this, what would this look like to me? Something in the middle. It's something that started that's not fully, I don't think the move is done. Alright, so I'm going to continue to hold. Alright, I hate the way it looks. It looks like it's going to turn around on me. I'm going to this is our slither of a fair value gap, huh? I don't know if I want to just let it play out or just exit and call it. I think I'm just going to pull my stop up just a smidgy higher. Maybe I shouldn't. Let's just see what happens. If somebody could throw me some chapstick through the screen, that would be fantastic. This is 1, 2, 3. It's on the third candle. That doesn't, it like barely. So this is kind of interesting to me. There is like a slither of a fair value gap, like right, it's that thin. It's like that, if even. In my opinion, I don't see that holding. It's possible. I don't see that holding though. I think it's gonna get ran through. Look at it trying. I'm not a believer. It's interesting to see it react at all, though. If we see the market explode off of that little slither, these my fucking roofers, bro. They're like, they say they're gonna come, and then they always show up like a day or two after they're actually supposed to come. And then they're just walking around the fucking property. Like, bro, you gotta show up when you say you're gonna show up. Like people, I'm not gonna even say that, but look, like the law states, like you don't want to be on this motherfucker. That is not him, that's my neighbor. I'm tripping for no fucking reason. Okay. But I'm just saying, imagine, right, like, it's kind of the same scenario of like, you're driving your car on the road and bike riders want to be doing shit that like cars are only supposed to be doing, or they want, you know what I mean? Like, look, even if the law permits it, sometimes shit is just stupid, right? Like, I'm sorry, but if I'm on a bike, okay, why am I trying to ride next to cars that can kill me? Do you know what people do in their car? They're texting, they're doing makeup. Like, why would you do it? It's like you're asking for a silly accident to happen. You know what I mean? So it's like, I just equate that to, like, walking onto someone's property when you're not supposed to be. Legally, you can get shot. Like, why would, you know what I mean? Just don't do it. And then it's like, imagine if you are that car that hurts someone who is riding a bicycle, right? I mean, you can't be the car, you're the person that's in the car, that's operating the vehicle. You know what I'm trying to say. And you hurt the person who's riding the bicycle where they shouldn't be, or doing things that they shouldn't be doing, right? Now, because you're an asshole, now I gotta go to prison for vehicular homicide because you're a dickhead. I remember I had this pool company that it was a property that I used to live in, and then I later turned it into like an Airbnb and then like moved out of it. And it had a pool in the backyard. And one time the pool people were scheduled to come and do, what do they call it? It's like an acid wash. These crackheads, and I am going to call them crackheads because they were on something for sure. These crackheads were supposed to be on the property. It was like the morning time. These crackheads showed up at like, it was well after dark. Okay? I'm talking like, it was like 9 o'clock when they showed up. Okay? You gotta do an acid wash on a pool and you're showing up. You're clearly on meth. Okay? And you're gonna show up on the property after dark. That was like a real life situation where like I went into the backyard with a gun. Imagine had I shot them. Now it's my fault. Because you show up looking and acting like a crackhead at crackhead hours, because these are not business hours, to do an acid wash on a pool. Like, it's bothersome. You know what I mean? Like, I don't want to have to pay for someone else's stupidity. It's ridiculous. Moral of the story: if you ride a bicycle, please do bicycle shit. If you work on houses that someone's occupying, don't show up when you're not supposed to. And if you're thinking about it, maybe call them, maybe knock on the door, ring the doorbell first. You know, simple. Don't mind me. This slither of a fair value gap is really trying to hold, huh? Who believes it? Who thinks that that's going to hold all the way until my TP? I'm starting to believe. It depends. We'll see how the next 2 candles close. Friday, I had such a beautiful day. Just because, like, I took one trade on Friday, and it was like super early in the day. And as I mentioned earlier, I lower my risk on Mondays and Fridays, and I don't go crazy about getting a trade that goes ham skis on Mondays or Fridays. So I got in one trade, and collectively between all of my accounts, I made, I don't know how much that one made. It was somewhere around, okay, I think it was around 1100. Yeah, and I was done trading for the whole day, and then I proceeded to just like fuck off with my life very early on Friday. And it's nice when that happens because I trade full time. I'm in the market Monday through Friday, New York session. I've abandoned London because when I wake up during those hours, my brain is like, what the fuck are we doing? Like, and it just doesn't go well some days. So I stopped trading the London session. But Monday through Friday, New York session, prime time hours are obviously going to be New York from 9:30 to about 11:30, 12-ish. So like just being done that early on a Friday was just beautiful. So I'm not fully in the Monday spirit where I'm like, you know, I'm just kind of like ready to sit in a trade for like 18 hours and, you know, I'm kind of, I feel like we've been here for a while. You got to be careful too, like when you feel yourself like starting to get impatient when you've been in a trade for longer than what you would care to be in a trade for. You know, that impatience will slide over to how you start managing a trade sometimes, and you just got to like watch that shit. Looking at the exit at market and cancel button and just like, oh, just exit right here, just be done with it, or move my stop and, you know, so I'm trying to be patient and just let it play out. This is a good example trade though for like just understanding like that, like seeing firsthand that like trades can take a while. And you're not guaranteed for it to hit any of your take profits. You could sit in a trade for 2 hours and break even or lose money. It's actually not uncommon. I think I had 3 break-evens last week, possibly more. And personally, I don't like walk away from my trades and just stop paying attention to them entirely. So yeah, I'll be sitting here hawking the fuck out of this trade until the end. And why? Why don't I? Experienced traders know, because you've experienced some bullshit. We all have. But if you're new and you may be saying like, well, why not just set your orders and just walk away? Well, I've seen orders get run through a number of times. I've seen stops get missed. I've seen limit orders get missed. So like personally, if I'm in a trade and I have a stop and it gets run through so fast that the order isn't filled, I want to be watching the trade so that I can manually exit that position as opposed to allow the account to be at risk. And I just had that happen probably it was 2 weeks ago. Like 2 weeks, no more than 3 weeks ago. I was in a trade and I think it was a stop. Yeah, it was my stop loss. And the market moved so fast, it just ran right through my stop loss and like my order did not get hit. And if I was not sitting at the computer and able to manually exit that trade, only God knows what would have happened. So it doesn't really look good, and at this point it even looks like a fucking triple top. So I don't see anything good happening from this trade. I don't really actually believe that fair value gap is going to hold. So now I'm just trying to decide, like, do I want to continue to just let it play out, or do I want to look at this and just trade this based off of fucking... it's like at the end of the day there is a break-even stop, so it's like even if I did just let it play out, take a peek, see at the higher time frames. I think because it's a protected trade, I think I'm just going to hold my initial premise. If there was a contraindication to stay in the trade, it would definitely be that there is like a triple top there. I don't really have too many memories of a triple top lying to me. But I already have a break-even stop. And it's not like I'm massively in profit where it's not really anything too significant. So I think I want to just let it play out. This slither of a fair value gap is like fighting for dear life. It's very fascinating. If nothing else, this is just like good exercise for like holding your trade when you feel afraid to hold your trade. Or when you're going in a particular direction but everything is saying that like that's not going to happen.
Not filled.
Alright, well that's that. But we let it play out. We let it play. Alright, that's it for today. So looks like I'm going to walk away with a break-even day here. And I mean, that's it. Yeah, and I'm gonna wait until tomorrow to take another entry. It's kind of interesting to see. I feel no desire to get back in this trade. I'm just watching to see, like, what happens here. Just reminded I need chapstick. Alright, I'm done watching. I'm done for the day, and I'll be back Tuesday. Tuesday's my favorite trading day, so I will be ramping up on risk a little bit. Today the max risk was $200. Did not lose any money today. There were 2 break-even trades, and tomorrow my max risk will be 350 trading with micros, and we'll see what Tuesday holds in store for us. Until then.